Welcome back. You're watching Market Fatafat right here on ET now, and let's take a look at Bajaj Electricals numbers. They actually hit the bourses a short while ago. If you look at the profits, definitely is lower on a year-on-year basis. If you look at the margins, also have seen some sort of a contraction on a year-on-year basis. The stock is trading lower by about 2.3%. But let's actually bring on board the management to understand what exactly impacted their earnings in the quarter gone by. We have Mr. Anuj Poddar, who's the MD and CEO at Bajaj Electricals, joining us this afternoon. A very good afternoon to you, Mr. Poddar. Thank you so much for joining us on ET now. And your numbers hit the bourses just a short while ago. And in that, definitely the commentary, what's mentioned is the fact that there was a weak consumer demand sentiment that sort of may have impacted your consumer products and lighting solutions revenues in the quarter gone by. Has the demand recovered from those low levels, or are you still seeing it impact in this quarter as well?
So firstly, thank you for having me, and I'll answer that straight up. Yes, Q3 is definitely looking better. It has started on a stronger note, and I think the two factors that have impacted Q2, one is just a general weak environment for consumer demand that we saw, particularly in September. But also there was a little slippage or delay of the festive season this year from Q2 into Q3, which is why the base effect kicked in. I do see a better start to Q3 and hopefully a better end to Q3 as well.
Okay, better start to Q3 and better end to Q3 as well. So approximately then, obviously, will it be the consumer sector or even lighting is seeing as much as a growth over there? And could we expect then, single digit, mid-single digit growth or a high single digit growth for quarter 3, quarter 4 then?
So firstly, consumer products segment has started off better in Q3. You are seeing a demand uptake on the tertiary demand, which always follows or leads to primary demand for us. You're seeing that across categories. I'll just also call out, even in Q2, it's a little lost in the numbers, but we've done fairly well in fans. In fact, I think we've gained market share in fans, coolers, mixers, which are core category for us in Q2 as well. I think that trend continues into Q3. I do hope, provided winter sets in on time, you should see a good Q3, also in the back of water heaters, which is another strong category for us. In terms of lighting segment, I think consumer lighting may be some way off from recovery, but we have a good order book on the professional lighting segment. Some of that revenue got deferred into Q3, which is why I'm also bullish on lighting overall in Q3, led by the professional lighting segment.
Okay. Also, Mr. Poddar, what I want to understand is in terms of the margins also, because they have also seen a contraction this time around. One, in terms of the factors that are impacting the margins and the sustainability of the margins going forward. Could we expect that 8-9% that we saw previously coming back in terms of margins for the second half of the year then?
If I look at margins, and I've been tracking that over a longer arc of the last 2 years, there has been a contraction of margins for the sector as a whole. In that, if you actually plot our margins versus competition over the last 2 years, we've done a much better job than our peers, I would say, in terms of balancing top line and margins. The impact on us has been the least amongst all the players in the sector, which I take as a positive sign. As the market bounces back, as demand picks in, as sales comes in, I think a lot of these margin pressures, some of this is tactical because of price discounting, etc. So I think that part will correct very rapidly as the market comes back, because the irrational pricing will go out and people will start picking up prices and margins. I can leave it for us on margin expansion, really our own operational improvements that we're working on. We have a clear roadmap on that. That is, very much playing out, and we expect that to continue. The third factor that I'll bring in here is our product portfolio strategy and premiumization. That is continuing to gain and do better, across our product categories. We are having been seeing improvement in that strategically on the right roadmap on that, focus on brand spends and product innovation. I think all of that is going to lead to better margin expansion for us. I think we're very much on that strategic journey, etc. is very much on track here.
I also want to talk about a trend that has been picking up is in terms of premium product side is doing much better than the mass products overall across industries. Is that something you have witnessed as well? In terms of maybe more premium products or more high ticket size products are doing much better than something that a mass product would do?
Yes, I think that trend is pretty secular and across the board, across product categories and beyond our sector also. That's a given. I think that bodes well for us because the reality is today, Bajaj Electricals has traditionally been more weighted towards non-premium products, which is why in the short term, our performance may be looking weaker. But as we're upping to my previous point on improving our product mix, we are premiumizing more. Every category, whether you look at mixers, coolers, fans, kettles, water heaters, our mix is changing for the better. And as that happens, that's why I'm confident about the medium to longer term. revenue should continue to pick up and the margins will expand at the top line, leading to bottom line expansion.
Mix you would be targeting, Mr. Poddar, then, for premium products, where do you see it headed in the next couple of years?
I'm sorry, I didn't fully hear your question, but if you're looking at a number,
Yeah.
I don't have a number for you, but clearly our mix is getting better. Internally also, if I were to look at our own gross margins at a category level, they've expanded by about 4 to 5 percentage points. Some of that is lost in the deleverage and our incremental R&D spends. But when I strip that down for ourselves, we're seeing those visible expansions in our own book in MIS. One other point I'd try to bring to you is if I look at this current quarter, we've had a contraction in general trade. I think a lot of that is led by weakness in the rural markets. But if we look at all our alternate channels, whether it's e-commerce, modern trade, institutional sales, they've all seen extremely healthy double-digit growth for us. So which is why, again, I'm confident.
A bit of a subduedness in terms of rural market, that is also something that has impacted the company. Lastly, I just want to know, obviously, in terms of the EPC business that has been demerged with the company now since the 1st of September, how is that looking like separately now? Your order book, last time I checked in July, was around 144 crores for professional lighting projects as well. So both these things, if you could give us an indication on that.
Yeah, so professional lighting I'll answer first. The order book is actually pretty good. We have a very good billing visibility for Q3, Q4, and that is continuing to grow. On the EPC business, as you said, it demerged effective 1st September. What we reported in this quarter is Bajaj Electricals is 2 months of results, that's July and August. Mind you, that shows a slight loss, but that's transitionary because this quarter, as part of the transition, innovation of contracts, will then continue some of the invoicing for that. I think that will bounce back from October itself. The order book for the EPC business is extremely healthy. In fact, it will probably grow 4 to 5x over the next 1.5 years in terms of just the billing and run rate over there. So I think Q3, Q4 for the EPC business should be extremely strong. Just a clarification that will going forward be a separate listed company, hopefully by end of this month. So that will be a separate listed company with separate results, but extremely promising and strong.
Surely watching out for that, Mr. Poddar. But thank you so much for joining in with us this afternoon on ET Now and talking to us about the company and what should we be expecting from the company going forward.